Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Eurodollar. A bullish long white Mariposa yesterday and fourth bullish white soldier after the previous session's bullish opening white Mariposa. This continues to be a follow-on higher to last week's weekly key reversal up. It was the highest high and high close since June 2021. The move utilized as a base for what had previously been distinct resistances but have now become supports. The June 25 high at 118.79, the dark blue now broken and soon to be reassigned July 2008 to date downtrend currently at 118.29, the bright green also broken and soon to be reassigned May 2011 to date downtrend currently at 118.41, and the June 2018 high at 118.51. The market also punched up and closed over a number of resistances on the way up. The 2025 high at 119.17, the purple 2018 to date downtrend currently at 119.84, and the bright pink neckline extension to the April to May 2020 reverse head and shoulders pattern is currently at 119.95. The break and close over these last two, well, they could be really important as these had stopped the market's rise back in September last year. Overall, this move up is noteworthy as prices pierced but did not close over despite the strong rally. They did not close over and out of the mid-2025 based bright red shallow bull channel, which is currently at 115.84 to 120.62, and that's the showrunner for this market. However, it did add ammunition to the idea I'd previously voiced about a late November 25 to date lopsided bullish halfway rotation. This had, as I said yesterday, potential up to the 119.5 area. We have easily reached and surpassed this level. Finally, we are set up to achieve, with just this week to go, a monthly key reversal for January. Thus, if we close this Friday night either over 117.45 or under 115.95, then we'd be on. Anything in between would have a lesser outside month. Right now we're looking at a monthly key reversal up. Now so far today, a reactionary move back down from the start today, but not a very emphatic one as prices have gotten somewhat tangled in the bright pink neckline and the breached and possibly broken purple downtrend, but from above. Cable, aka sterling against the US dollar. A bullish long white Mariposa and fourth bullish white soldier yesterday after the previous session's bullish opening white Mariposa. It's once again a new high and high close, one not seen since September 2021. Prices continued their break higher, up from the very shallow dark blue bear channel, dating between early July to early August last year through to last week. This time punching up and closing over the September 25 high at 137.26. And the earlier July high last year and January 22 high, both at 137.88, as well as the bright green 2021 to date downtrend, which is currently at 137.20, plus the October 21 high at 138.33, so quite a lot altogether. Beyond these, we still have as resistances the September 21 high at 139.13 and the July 21 high at 139.82. Now, over the last few days, I've said, and I quote, this action since the double bottom seen in November last year is looking increasingly like a possible bullish halfway rotation. If that is to be the case, then there is the opportunity for a move up to the 138.50 area overhead. More on this as it develops. Well, and that's the end of the quote. Well, this has developed and the market has grasped that opportunity and reached 138.50. So that pattern is fulfilled. So far today, a bearish reactionary move back down right now, looking like a possible bearish rally, and dare I say it, setting up for a possible tweezer top. Hope it's too early to contemplate that last idea just yet. US dollar against the Japanese yen. A bearish closing long black Mariposa and third bearish black crow yesterday after the gapping break lower at the start of this week. Now prices pushed down and closed below the mauve rising medium moving average, which is currently at 153.90. The lesser Fibonacci lines at 153.40 and 152.52, halting at the combined October 22 high at 151.94 and a November 23 low at 151.92. We are once again well and truly back within the bright red, broken but perhaps still valid, maybe even repaired, April to November 2025 bull channel. It's currently 150.47 to 157.43. Further below we have the August 1990 high at 151.58 and the 50% Fibonacci line for the whole of the 2024 move at 150.76. With all these moves lower, we're now set up with less than a week to go for a monthly key reversal here for January. Thus, if we close either over 156.65 or under 156.15, we will be on. Anything in between will have a lesser outside month. Right now we're looking at a monthly key reversal down. Now so far today, a reactionary move back up from the opening from the combined support at 151.92 and 151.94 over the lesser Fibonacci line at 152.52, but not by much. US dollar against the CNH, the offshore Chinese yuan. A bearish closing black Mariposa yesterday after the previous session's indecisive doji cross. It was another new low, one not seen since May 2023. It was also contained, once more, and just about, from the small breached bright green bear channel, which is currently 689.97 to 694.54, and that's formed since mid-December last year. We have an additional January-based shallower bear channel, which is currently at 693.56 to 697.18, but I'm not too keen on that one right now. Overhead we have the September 24 low at 696.90, whilst below, well below, just about, we have the bright red extension to the upper trend line currently at 693.04 of the May to August 2022 ascending triangle. Now this halted the decline yesterday, it stopped it dead. After this we have the May 23 low at 689.53. I once again think that it may be time now to start talking about the 50% Fibonacci line below of the February 22 to April 25 move at 686.60. Now so far today, a reactionary move back up from the bright red trendline extension, but so far capped by the bright green breached upper bear channel trendline. US dollar against the Brazilian real. A bearish open and close long black Mariposa yesterday after the previous session's failed hammer pattern, which was also a bearish engulfing pattern. Prices punched down from the open, down through the combination of the interesting 38.2% Fibonacci line of the October 2018 to December 24 move at 527 even, part of a small but significant congestion band of 526.20 to 527 even, as well as the important declining dark blue middle time currently at 526.56 of the mid-December 24 to mid-April 25 bearish shift pitchfork, and the shallow and not so good bright red May 24 today uptrend currently at 527.10. Plus I suppose the 61.8% Fibonacci line of the April 22 to December 24 move of 524.07. Now despite this big move lower, the bearish shift pitchfork is still the showrunner for this market. Now we've ended up in a fairly empty zone with the next support down at the 50% Fibonacci line of the October 2019 to December 24 move of 524.07. US dollar against the Mexican peso. A bearish open and close black Maribosa and third bearish black crow yesterday, after the previous session's long-tailed, indecisive spinning top yesterday. It was yet another new low and low close, one not seen since June 2024, and also a third consecutive close below the small dark blue November 25 to date based bear channel. It's currently 1739.39 to 1784.47. This is not a too well defined bear channel, but it's still there. We ended up at the bottom of a fairly dead area with not much support until the congestion between 1703.89 to 1709.23, and that's made up from the April and March 2016 lows respectively. Below this is further congestion at 1688.97 and a neckline extension to the January to May 2021 head and shoulders top, which is currently at 1685.08. Now so far today, a small dip, though not really extending the range lower by much, before a turnaround higher, though again, given this is a fairly empty zone, it's not turned up by much.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.